were just discussing this idea that, rates have continued to climb despite the cuts. And what does a Jay Powell make of that and think about that?
Well, good morning. I think this is a very unusual time when the Fed is cutting rates, and this is not a weakening economy. I think part of what we're seeing in these longer term rates is the fact that markets are adjusting to the expectations that they've had for some time about the path of interest rates. And I think beginning to take note of the fact that we are financing some pretty big deficits as we go forward with really no end in sight at this point.
And so when you get to a November post-election, if you were on this board, what would you be telling Jay Powell to do?
So the Fed has taken a big cut already. And I think my inclination would be to proceed with caution here. Clearly, this is a committee that must commit to a forecast. They can't really, although they say they go meeting by meeting, you really are laying out a forecast. The most recent data appears to have been stronger than the level of confidence you had going into that big rate cut. But I think the Fed will have to follow through on its forecast until it sees a little more clarity around how the economy is unfolding, and in particular, the path of inflation.
Do you think it was a mistake to cut as much as they did in September?
So I don't think you can say it's a mistake yet. Certainly history will give us a chance to do that. But in the scheme of their current rate cycle, again, I think you have to give this time to play out. And what will matter going forward is the path and how much further they go with that.
So how strong do you think this economy is? I mean, that's fundamentally the question, not just in terms of the growth piece of it, but also the labor piece of it.
I think the economy looks pretty good, Andrew. When you look at the outlook for growth, when you look at the labor market, and again, we've seen it come off an historically tight level of job market to now coming into better balance at the same time that inflation's come down. Those are all good indicators for the economy. That doesn't mean that the path ahead isn't going to be challenging, though. Let
me ask you if we can ask it in just a political way, but I know we have 13 days to an election. Why do you think what do you attribute the economy's strength to?
Well, I think you have to say that the economy is really operating off a combination of the Federal Reserve and the federal government taking massive actions during the pandemic. We have seen a tremendous amount of fiscal money come into the economy, and that is still there. You have seen the Federal Reserve with a large balance sheet, low interest rates, and that combination at a time when supply chains were backed up allowed inflation to get a foothold in the economy. So now you see things backing off.
But so when you look at all of the fiscal spending, do you say, oh, that was inflationary and that was a very bad decision? Or do you think that that was a good decision, okay decision? How do you think about it? We were talking about Paul Tudor Jones was on our broadcast yesterday, and he said eventually the only real answer to our problems here in the U.S. are going to be to inflate away our problems.
Yeah, I think you have to say in the short term, many of these decisions are good, right? When you're trying to provide relief to the economy. Policymakers, however, have to look to the long run. And the long run is not a pretty picture when it comes to our fiscal situation. And so the outlook is more inflationary. There is more upside risk there, and it will put tremendous pressure on the Federal Reserve as an independent central bank to decide how it's going to respond to what lies ahead.
That was my question. How much do you think ultimately, we talk about the different mandates that the Fed has, when it comes to our debt and deficit and just how much we're going to be spending over time, how much do you think that's going to get calculated into the larger scheme of things?
Well, I think it has to get factored into that. It has to get factored in this way. You have to look at the path of inflation and understand where there are upside risk, what should the Federal Reserve be doing to manage that potential risk. And that's why I think they will have to be more gradual and cautious in looking at the path of interest rates ahead. It doesn't mean there's not going to be further cuts, but I think the resting point for those interest rates could well be higher than originally imagined.
You know, Esther, China notwithstanding, we have led the world in the way our economy operates. And I guess I'm talking about Europe, versus Europe or South America. And I think 40% higher GDP average over the last 40 or 50 years. So we do have an economy that's the envy of the world. Are we at risk? And we've been talking about whether we want to get up to France's 52% they're much higher overall tax rates, much more regulation, much more of a social safety net. We're down at, I think, 29% for taxes. Are we at risk of losing that preeminent status?
Well, I think you always have to keep in mind what are the factors that led us to be such a great economy and the envy of the world. And that has not come by accident. It's come by a combination of things, our capital markets, our rule of law, but also responsible federal spending. And right now, that spending does not look responsible. In fact, it looks like over the long run, it could undermine many of those advantages that have made us a great economy. Right. And that's why I think it's well worth policymakers' time to really zero in on this issue among many they have to think about.